Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, April 29, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Well, the market's trading up into, as we discussed last week, the convergence of the 50 and 20 period moving average. This is still, in my book, a bounce in a downtrend, albeit the media, tout TV, the pundits, the people they parade across, they're beginning to believe, and they want you to believe, that the correction is over, and it may be. We have the awareness that it may be, and we'll go over how we'll know in a moment. But they want you to believe the damage was done. They went down for a couple, 3 weeks in a row. Haven't seen that in quite a while. Had a 5 or 6% correction. That's enough. Now it's back to new highs. That's the stance they're taking, or they're beginning to take. What do we have on deck this week? We have FOMC/Kabuki theater. Right now, we're basically waiting on the Fed. Narrow ranging day today. They're not going to necessarily get too far before the Wednesday afternoon FOMC announcement. However, we do have some important numbers, some important stuff on the board. How are we going to know where this thing just turns back to all-out bullish, forget the correction, it's party on type of stuff? Well, if they get back above this trend line, and namely this breakdown candle high, 515.30, that's going to be a signal to me that I'm not looking for downside if they close daily above 515.30. Can they come back below even if they do? Of course they can, but while they're above, I'm not looking down. I'm looking for either neutral market or a market that can trade higher. Below the trend line, I'm still staying in the she's not finished correcting camp. Last week, we talked about, and specifically in the live room, but also in this video, we had a ABC inside of an ABC. It was the title of one of the videos last week. What did I mean by that? Well, you have an A leg down, potential B leg up, and it's obviously not complete yet. Could have been complete here, but wasn't. And now you're looking for the completion of the B leg and or a C leg down. Inside of that, you had an A leg up, a B leg down to last Thursday, and then a C leg up, eclipsing the most recent high from Wednesday. That was the ABC, and the ABC completed on Friday. Now they're basically up into the moving averages, above the 50-period moving average. Next stop is the trend line from a big picture daily chart perspective. What's going to be front and center this week when the Fed gives their projections, their interest rate announcement, their prognostication? Of course, they certainly don't realize, the Fed that is, that they are the dog getting wagged by the tail. The tail is the market. The dog is the Fed. The tail wags the dog. Front and center this week will be inflation discussion. Some of the economic data points pointed to inflation could be at least starting to heat up again, have another leg higher. Looks like any other chart. If you plotted out inflation, it looks like any other chart. Price goes up, price goes down, goes back and forth. What is the trend? The trend is your friend. Anybody make money today inside the numbers in the live room? If you did, let's hear about it under the video. Why is that? Because it's a pay it forward system. We want to help a brother out, and I'm not the brother. The other brothers are the other traders looking for a solution. It's very hard to find a solution out there. You churn, you look, you try, you believe, and then it doesn't work out. It's very hard to find a solution. Traders don't want to hear from me. I can tell you everything that's positive about my services. They want to hear from traders that are benefiting from the services. Is it worthwhile? Do the numbers work? Are you making money in the trades? Do we trade together? Do we learn stuff in the live room? Do we teach constantly? Do we go over chart after chart after chart? Do we talk about psychology all day long? Tell the other traders out there. Before we go to the intraday stuff, real quick on the weekly chart, same routine. The other week, bounce off the 20-period moving average. A week's worth of bounce last week. Here comes the trend line. You have a pretty good recipe for volatility again this week with the Fed announcement tomorrow on Tuesday. Maybe the morning rush as we normally get like we got today, or at least half a rush. And then we're waiting on the Fed once again. Wednesday, same thing, little bit of a morning active or activity, and then quiet till the afternoon announcement. So this week is marred by waiting on the Fed until after Wednesday. Let's get to some intraday stuff. Right of the vertical is today's activity. We have no lines on the chart, no support, no resistance. Let's take it from the top. What I urge you to do is read the notes, pause the video, go back to the chart and double check the work. I'm going to point out a few highlights or important things, such as numbers like right here. We'll start with the bullish side, which entails price getting above Friday's high, opening the door for a push higher toward a big-time resistance zone beginning at 510.85. Let's start there. High of day, 510.75, and I say this in the live room, and I remind everybody all the time, we don't split hairs over pennies. Sometimes they come up short, other times they spike them through. We never know which one. I give you the number, and each individual trader, specifically in the live room, does whatever they want, whether they want to jump in front a little bit or wait for a spike. We have both factions of traders. We have the patient and we have the slightly impatient. But we work on patience every single day, don't we? So that was our resistance zone, 510.85 up there, where they should not be able to simply waltz right on through, and that certainly was the case. The flip side situation is getting below 508.05, which turns her slightly bearish and opens the door for a leg lower toward 506.90. Give or take. They didn't quite get there in the afternoon session. They made an attempt. They came close, turned around, went back in the other direction. Hold your horses. There's more. First of all, we had traders short from in front of the number. They got paid handsomely. Then we'll scroll up a little bit, see what else we have, because there are other numbers that will come out of the woodworks, as they say. 9 o'clock, what's the deal this morning? We've got a potential sell the rip situation. The zone between 510.85 and 511.55 is overhead resistance and an area Mrs. Market shouldn't be able to simply waltz right on through. That's telling you very directly, that's a short opportunity. And we're scrolling up, see what else we have. Obviously, it was very quiet today if you were watching the session in the morning session and in the afternoon. Got a little whippy in the afternoon, but that's a different tape than in the morning. Like this right here, 944. 508.75 down to 508.24 can bounce the tape. 508.05 is a number just below, also bounce the tape. Happened in the afternoon, but nevertheless, 508.75 did bounce the tape. Gave you the base hit. A little bit more, kind of a pulling into second base, maybe a head first slide. Market got real quiet, not a lot of activity. It was a sleeper for the large majority of the day. Pause the video, read the notes, go back to the chart, and double check the work. About stocks on the move today, we had 3 on the board this morning: CleanSpark, Trip.com, and Coinbase. Let's take a look at all the charts. Why? Because they all hit their entry objectives. It was kind of a bonanza in the live room this morning early on. CleanSpark, there's your zone, 17.99 down to 17.42. Came into the second number after cutting through the first, ripped it back up in the other direction. Traders got paid accordingly. Painting by the numbers, your average is in here. We also in the live room had plenty of traders that took it only at the second level and got all the rip. Nice trade. The numbers work. How about Coinbase? We're focused on the morning activity. Same routine. Cut through the first number, went right to the second, ripped it right back above. Base hit, slide into second base, safe. Gave you about a 2% rip in total. From an average, it was more. Figure your average cost is $225. Where'd they get up to? $230. Nice $5 rip. Forget what they did in the afternoon. The trade's over. This is a morning business. About Trip.com, we had some participants in the live room in this one as well. 48.87, they hit it, spiked it, ripped it right back, gave you the trade in minutes. That's it. Done deal. A little bit more, in fact, a lot more than the minimum required base hit right out of the chute in just a couple of minutes. We're talking lazy swing trader, automagical algo system. We bought Apple last week, 165.21. Traders in the live room know that I've been waiting for that number for quite a while. Weeks. Patience pays. I put the number on the board. I put it in the system. When it hits, it hits. If it doesn't hit, it doesn't hit. Look what happened. It hit. It paid. We took first profit on the swing trade. The rest is a risk-free, emotionless trade. Got a nice gap higher this morning with some follow-through. Trade's doing just fine. How about Baidu? Nice rip this morning. Up a few bucks, maybe $5 or so. Picked this one up last week. Question is, how did the system know in advance that some news was going to come out linking Baidu and China and Tesla and all that stuff? Automatic car driving systems. Imagine getting picked up in an Uber with no driver, because that's coming. Autonomous vehicles. Nevertheless, we don't care about the news. We don't care about any of that stuff. What we care about is, did we get the right price on the right stock? Lazy swing trader, automagical algo system. What's going on over in Camp IWM? Well, they got above today the convergence of the 100 period and the 20 period moving average, and they're going to try and get higher. They're going to try and get to the 50. Above the 50 is what? The trend is your friend until the very end. On the weekly chart, above the 20-week moving average, and they're going to start to climb this last or most recent breakdown candle in the sequence. Daily chart will want to get to the 50. It's like a magnet. So you see, when you look at different charts, you could see them doing different things. The daily chart's trying to get to the 50. The weekly chart's trying to climb a big-time breakdown candle. It's all depending on your perspective and time frame on how you're looking at things. These are also some of the things that we discuss and teach and learn in the live room each and every day. All in all, I'm still looking for a lower high to be put in and a rejection, whether it's this week, whether it's next week. I'm looking for another leg down to ensue at some point in May. What about the folks down at the transportation department? We don't need this line anymore. What are they doing? Well, below all the moving averages, they're essentially eating time off the clock, beginning to build and have been building a bearish type of flaggish, wedgish, sloppy-ish formation here. Move down below the moving averages, find resistance, back and forth. That's what they're doing. If they break the chain, they'll get above the 20-period moving average. That will begin to break the chain, break the downward momentum pattern building situation. Look what they're doing on the weekly chart. Below the 50-period moving average, this is the third week in a row. They're just eating time off the clock. That's not bullish, that's bearish. What turns this bullish? Back above the 20-period moving average on the weekly chart. Remember this? We had a bullish kind of box up here that we were looking at. And I said if they get below the low and they kind of break the chain of going back and forth, that's what they did. They broke the chain, so they're no longer in this bullish formation above the moving averages. That's what they were before. They were staying above the moving averages. They were going back and forth, eating time off the clock. Then the character of this chart changed. They had 3 weeks down in a row. This one doesn't count because it was still above the moving averages. This one broke below. Now below the 50, and they broke the chain of the pattern they were building. So you reassess the chart, and you go with what the chart is currently telling you. It's currently telling us it's more bearish than bullish. They're eating time off the clock in another sub-bearish micro position after the last couple of weeks. The transports is my second favorite market leading indicator, only next to Camp IWM, but my number one favorite canary in the coal mine. What about the Q people? Do we see anything different here than we've seen on other charts? Is this similar or significantly different than the S&P or the spiders? No, it's about the same. Back above the 50-period moving average on the daily chart, the trend is your friend, and that's where we'll leave it. Significantly higher means back above this breakdown candle high, which comes in at 442.15. They start getting back above there, and that's a long way off from where we are. But just in case, if they get back above there, you're looking at new highs sooner than later. The only reason I bring that stuff is we have the Fed this week. You never know what's going to happen after the Fed. Is the Fed going to be hawkish? Are they going to be less hawkish than people think? Are they going to be more hawkish than people think? Are they going to project any interest rate cuts this year? 1, 2, 3. All those things will factor into the kabuki conversation, but we still don't know whether they're going to buy the rumor, sell the news, sell the rumor, buy the news, all that stuff. We're going over the charts, and therefore, we're not going to be surprised at whichever way they go. We're going to have the goods ahead of time. What about the financials? What are they doing? Anybody see this as bullish or bearish? This is bullish, riding the convergence of the 50 and 20 period moving average in a bullish, flaggish, pullbackish kind of manner. This is bullish, setting up for another move higher until or unless they get below, break the chain, and get below the low of this last breakup candle in the sequence. This low is $40.43. So we'll take this line down here and we'll put it up here at $40.43, and we'll say, for now, that's our bogey. Stay above that and she's bullish, get below that, and you reassess on the bearish side. XLF will be sensitive to whatever the Fed does or doesn't do and discusses this week. What about the semi space? Smashmouth, the Philadelphia Semiconductor Index, exchange traded product. Above all the moving averages, the trend is your friend. Remember this from way back when? Weekly chart put in a tail, started going sideways, said anybody can be short against this high, close weekly above this high or even daily a couple of days above this high, and the trade will be wrong, and they finally collapse back down. We couldn't tell whether this was a bullish pattern or a bearish one from the high. It was subjective at best, but certainly the downside played out to where? Just to the 20-period moving average, like the spider and the bounce. Each chart is treated and is independent of one another. Therefore, from a chart perspective, the semi-space, the SMH, we're going to say all we need to know is above the convergence of the 20 and 50 period moving average, she's bullish. Back below, and she can fall above, and she's bullish to neutral. That's all we need to know. Look at the volume. You're going up on decreasing volume. Is that bullish from an institutional participation perspective, or is it not? And the answer is it's the latter. It's not. Price is the absolute. Bullish is price higher. I get that. But if you want to know whether there is or is not institutional participation / institutional sponsorship on a move, you do not have it. Repeat, do not have it on SMH. Doesn't mean price can't move higher, but you don't have a new leg higher yet with institutional participation on a flood of volume. That's what I'm saying. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.